Hi, this is Mike Andrig for BreakingCall.com. It is Sunday, August 25, and we are revisiting macro market technicals with a view toward when we might actually expect a meaningful correction or possible trend change, using the S&P 500 and the SPDR ETF as our primary benchmarks. We reached near-term oversold conditions last week and may have started working that condition off. Longer term, we are still overdue for a more significant correction of 10 to 20%. And we see a good chance of that scenario playing out as we move through the seasonally difficult September through November time period. Metrics like the percentage of stocks above the 200-day moving average and the bullish percent index are at high levels that leave little sustainable upside. Readings in the ranges currently are often seen close to market tops. If the current bounce lacks follow-through, we will be watching for possible reversals in the second half of September, and another major seasonal time window appears from the end of October into mid-November. The direction of markets into these time periods would be expected to reverse, and we will need to remain flexible. A couple of key market sectors, namely banks and housing, have corrected less than the major averages and appear vulnerable near term, even if the broad market trend remains up for a few more weeks. Let's first show the advanced decline line, which has a potential double top and a dip from recent highs. Then both the S&P bullish percent index and the percentage of S&P stocks above their 200-day moving averages are at or near the highest levels seen in the last 3 years. Looking at the SPY SPDR ETF weekly, this issue topped in late May, hitting combined time and price resistance. It then came back about 33% of that last leg up, but was only able to push slightly above the prior high on the next rally. Formidable resistance remains overhead. For the uptrend to remain intact, new highs are required prior to a violation of about the 155 level in the SPY. Important longer-term trend support is in the 148 to 151 area. The SPY daily shows initial trend support at about 164, with key intermediate term trend support in the 159 to 161 area. Finally, let's look at two sectors that look vulnerable. The Market Vectors Bank and Brokerage ETF, symbol RKH, is extended near the top of the trend channel and remains near recent highs. A negative momentum divergence has developed, and this issue could easily test the 45 to 46 area. The iShares Dow Jones U.S. Home Construction ETF, symbol ITB, has already pulled back but may have trouble holding support and remaining in the trend channel. There is also negative divergence and more advanced technical weakness in the housing than many of the other sectors. Any rally here would appear to be a selling opportunity in these two sectors. We would be more interested in a longer-term trade if support in the $17 area were validated in ITB. Thanks for watching, and visit us often at BreakingCall.com.